With the Crimean Peninsula voting on a referendum on Sunday as whether to split from Ukraine, we have one question. What is this going to do to oil and nat gas markets? Here to talk to me about it today is Michael Peterson. He's managing director at MLV Co.
Pleasure to be here. Thanks,
Michael,
Joe.
as always. Yeah. So what do you think? Do we see markets freeze up Monday if they decide to split from Ukraine?
My guess is no. This is a political objective that the Russians are championing. They have much more authority in not pulling the economic lever than if they do. So I would argue no, it's still a potential, but unlikely.
It's interesting. And you bring up the economic lever. So I'm wondering about the political lever. What do you see as a political advantage or maybe disadvantage of Russia doing what it's doing right now?
Well, the Russians are seeking to politically influence what's going on there, and they're willing to sacrifice some amount of inbound energy revenues to make that happen. That's the threat. The U.S. response to that, I think, is not going to be met very successfully. Politically, we don't have an ability to offset all of the volumes that the Russians are able to take off the market. So I think politically we're going to prove an inability to offset their demands. On the economic side, if they're willing to take an economic loss, lowering the price of oil, even for a short term with 5 million barrels next month, I don't think will be successful either.
And that brings up the obvious question. You've heard it in Washington. Oh, let's start considering nat gas exports, right? So LNG would be the big thing. Is this, I mean, really like a possible idea? I think a lot of investors in this space are saying they don't think so.
You know, I was in Washington a couple of weeks ago and heard that very thing as this was unfolding on the Hill. And in the broad scope, sure, this is a resource that we should be developing more aggressively domestically.
Okay. Yeah.
That said, if we did have LNG exports in earnest, we still wouldn't be in a position to offset, because if you're going to put in an LNG export facility, you're going to lock in 75% of that capacity on a 10 or a 20-year contract. These are very expensive investments, and so even if we had those export facilities, we wouldn't have surplus capacity to the degree that we're looking for.
So in other words, we don't react to one event or another event. Most of these companies investing in very long term.
Nobody's going to make that kind of an investment for a contingency. They're going to do it on a long-term basis, and that would mean it wouldn't be available.
All right, Michael, as always, we appreciate your sharp take on these things.
It's my pleasure.
That's Michael Peterson of MLV Co. for TheStreet in New York. I'm Joe Deaux.